You're listening to the podcast for grain merchandisers by grain merchandisers. Join us in our good-humored attempt to serve as a voice of reason in an industry fraught with misconceptions and half-truths. And now, from deep in America's heartland, this is the Elevator's Cut.
Hello and welcome back to another episode of The Elevator's Cut. I'm one of your hosts, Roger Gaddis.
And I am your other host, Jason Wheeler, and we are glad to be joined in studio today with an old friend of the show, legend in the industry, Mr. Jeff Reardon. How are you today?
I'm doing great. Thanks for having me today. I can't believe this studio you have, Randy. Wow, unbelievable.
Yeah.
He's really outdone himself.
He has.
Yet again.
He has.
Yes. So you flew in all the way from Florida
I
to
did.
share with us some of your wisdom from the banking world.
So much wisdom that Zoom wouldn't handle it. We had to be here in person.
That's right.
It's heavy stuff.
It's good. That way we can go to lunch beforehand and make outlines of things we want to talk about. It goes great. So, Jeff, for those that haven't heard of Jeff before or listened to our other episodes with Jeff on them, Jeff comes from the banking world, right?
Absolutely.
So he's a financial guy. He can really crunch those numbers. You need to sharpen your pencil,
Pivot
get some
tables.
stuff done.
Yep.
I
I have
mean,
a pencil sharpener.
He'll get it done. And that's why we like Jeff. So Jeff helps. So as you guys know, Roger and I work with grain elevator folks in the business. And we help them on the merchandising. But when it comes to financial stuff, a lot of the accounting issues, boom, Jeff is in there like swimwear. And
Literally.
he gets it done. And yeah, Jeff is a swimmer, by the way.
Thank you.
Yes. Swims like every day.
Yeah.
You swam to Alcatraz once,
I
correct?
did. It was fantastic. It was very cold.
Yes.
And deadly. But
And
you made
they
it,
say
yes.
deadly, yeah.
Yeah, was a Division I swimming athlete. So a lot of great things Jeff brings to the show that we don't normally have. So we're glad to have him. But anyways, the big thing, of course, is he helps all our customers and more folks in the grain business on the financial side and all that goes into that. So we have lots of questions for you and clarity you can provide. So we're looking forward to that. So. The thing Jeff comes out and travels with me sometimes, and we do meetings sometimes. And one of the first things I always ask you, and so I'd like to ask here, is how's everybody doing financially? Are people making money this year? Because you look at everybody's year-end financials as they happen, and you can kind of see some things a little before they're happening because you're looking at month ends leading up. And
That's right.
Anyways, so Jeff's got a good overview, so I'd like to hear your thoughts.
I'll say the industry as a whole, for our elevators, right, the niche that we work with, they're doing very well this year. It's incredible to see people, as the market changes, they change with it, which, I mean, obviously that's something that White Commercial spends a lot of time on to help people, training people to do that. But I'll tell you, some of it's instinctive. This year, I'll say we're going to be a little bit above what our median numbers have been over the last 10 years. Even with the expenses going up, I mean, everybody knows about insurance, right? I mean, that's a thing. It's gone crazy. But I think the numbers are going to be better from what I'm seeing so far. And but I will say, Jason, I miss the inversions. I mean, we're doing
good. A lot
good.
of people do.
But, I mean, the inversions. And it's a great market, right? When the market's inverted, everybody gets to make money, which is what we want. You're looking the producers make money, elevators make money, the users make money. Everybody's doing well with inversions. But traditionally, we live in carry markets, and people know how to trade this market, and they're doing really well at it. Yeah, look, you got to own grain, right? That's something the three of us talk about often. Please buy as much as you can at Harvest. Harvest ownership is critical to your success. I don't care if you're multi-billion-dollar company or whether you have, 500,000 in space. Own Harvest grain, number one. And if you're going to offer fees, and I'm not saying that you should offer storage, believe me, but if you have price later fees, raise them.
Yeah.
You guys talk about it all the time.
Whatever they are, it's not enough.
Yeah.
Right,
Just
always,
raise them.
regardless. But
Lead the market.
this year, the reason being, one of the big reasons being is spreads are huge, right? Carries are big. So if you're going to choose to not basis trade your space, and that means you don't have harvest ownership, you need to charge as much as you can to compensate for what you should have been able to merchandise your space for. And take corn, for instance, big carries coming out of harvest all the way to next summer. You need to, that's what your space is worth this year. And if you're not going to be able to get that value out of basis trade, you've got to get it out of fees. So fees need to be raised in a lot of instances to compensate for that. That's just the way it is, right? If you're going to realize the value of your space, you either have to basis trade it or you got to charge appropriately for your space.
Yeah. So, So you're talking about this coming fall into, I think July was like 35-cent carry, and the bean spreads are really big as well.
Yeah.
Everything's really big. So traditionally, go back to something you said, Jeff. Traditionally, you think, like somebody from the outside looking in, and I say outside, people within agriculture that aren't in the grain business, look at it and say, ooh, big carries, that's really good for the elevator. Elevators can make money. And you're saying, yes, they can, right? But you said something that was interesting. I wish for inverses we made more money when there was inverses.
I love inverses.
So this is something I agree with. I understand. But I think the general ag person is like, that doesn't make sense. You need carries for elevators to make money, and we get that. So what do you mean by that?
Specifically price later, I want to keep it at the easiest possible level because everybody's in a different place today. When you're selling price later grain, great news, right? You're selling it, and you know what else is really good? On the other side, right? If you're a producer, you're waiting for those prices to spike because there was some disruption in the market. Everybody's winning. And, we have many of our customers are producers and grain elevators and users, right? But we definitely want everybody in our market to make money. I mean, we do better. These are lifelong customers. Whoever you're selling feed to has been there for years. Whoever's producing in your area has been there for years. These are family friends. You go to, you see them on the weekends. They're just part of the community, just like you are. And when everybody wins, it's just a beautiful thing, and that's why I love inversions.
Print the shirts. That's great.
Let's do it.
Well, and like you said, it checks all the boxes, and whether it's inversions or carry markets, but it's when market participants aren't keying off of the signals they're given when they go counter signal, whatever that is. That's when you start having wires get crossed and value not being there. So a good way to demonstrate this is with carry markets and bin space, right? So once that bushel hits the bin space, once it's harvested, the time to get a return to the acre is done. That's it, because it's not on that acre ground anymore. It's in a bin.
Yep.
Now is the time for that bushel to get the return to bin space. Well, if the return to the acre hasn't been taken yet, now it's coming out of the expense of the bin, right? Yes. So what that bin space is worth. So you're robbing Peter to pay Paul in that instance. And so that's where things kind of come off. Now, again, this kind of points to the idea of having your fees correctly if you're a commercial elevator. But, some of those folks that have an elevator and farm together, the most successful folks I've seen that do that make that delineation. They make sure their farm grain is sold by harvest by the time it hits the bin. They know that can get a return to ground, but they got to get a return to bin space. So the guys that do this well, that farm and have an elevator, make sure their own grain is sold by the time it hits the bin. They don't use it for free storage. The guys that do it well do not use their elevator for storage for the farm.
That's right. Neither one of those people are trading on emotion. They're trading profit-based merchandising, profit-based farming. I mean, you guys spend so much time in your origination groups talking about that, whether it's your text group, whatever group you're talking to. It could be a class that you're doing. It could be a meeting. You're really trying hard, and I appreciate that because I see the results in the financials. And, the people that are doing what the market tells them to, like you said, they're successful. And you know what? You may not hit a home run every year, but every year, I got to tell you, you want to make money every year. The banks care about that, right? You want to have a positive year, and that's the way to do it.
Yeah. So how much? So speaking of that, I know you cover a big geography from the southeast to obviously the Midwest up to Canada, and you work with a lot of folks. As far as margins and things people are looking at, you said it's doing better,
Yes.
doing reasonably good this year, above the 10-year median and all that.
Definitely above the median, yes.
Despite not having the big inverses like we've had. But so I mean, what sort of numbers should folks be looking at, or if it's hard geographically, like what should they drill in on their place, like what's good? I guess.
So years ago, and you and I, the three of us have talked about this before, but years ago, I came out of the banking world and I couldn't come up with a metric that made sense to the ownership groups, to the co-op boards, to the people, to our customer base, right? Because that's who we have, 250 or more commercial customers we work with every day, and I wasn't hitting, I was talking about current ratios and leverage ratios and all this stuff, which is very important to the bank. Don't get me wrong, I calculate those, but I couldn't compare anybody. You had customers in Georgia I love all the markets, but we just came from Georgia Feed and Grain. It was a lot of fun. They're different than Iowa. They're different than Idaho. They're different than New York. They're different than Ontario. So what are we going to do to compare it? And it clicked. It's like, oh, yeah, of course, we have this space we have to pay for. So all the numbers that I use, I go off of bushels of space because that's what brings us together. We all have to pay the bin builder, unless we're going to do it ourselves, and we got to pay for the steel and the concrete, right?
That's right.
So if we're doing that, then it's a great metric, right? So what I see is across the board, if I look at the median, and for us, it's probably a little bit under $3 million in space. It's been going up every year, but a little under $3 million in space. I'll tell you, we should make 70 cents this year, right? So we should make, at $3 million space, we should make $2.1 million bucks on storage fees, on everything you talked about. I don't want to say storage. I want to say price later. We hate storage.
You're talking about the elevators.
The elevator
should be.
Yeah,
Okay.
Yeah. Storage is crazy, right? Somebody else controls your space. So, so price later fees, grain merchandising. If you have a year where you're drying a lot, you're looking at 70 cents. Yeah. If you do that, you're right there. Everything that goes into profit for your elevator. So 70 cents a bushel of space.
Bushel of space. And that's being key because some people will hear this and be like, I can't make 70. Well, it's bushel of space.
Yes.
And a lot of places will turn their space 2.5 times.
Right.
And so that figures into that amount. That's how you divide it out. So
Absolutely.
it's very, like you said, it's possible because that is what it has to be.
That's
what you got to have.
We have to pay for that space,
exactly.
and we have to pay for our employees, and we have to pay for depreciation.
It's amazing. You can't do that by giving away your space,
you
right?
can't. No. You got to charge for your service.
So, and that's interesting because a lot of people see like, well, we've always made X amount of cents here and everything. Yeah. But of course we operate in the world. We know like the expenses for everything has gone up quite a bit. And we have to adjust and make sure that that our revenues are matching those cost increases to keep pace. And nobody wants to, everybody's just like, oh, I take whatever the best bid is, subtract the freight of whatever, which maybe they're figuring that right, maybe they're not. Mm-hmm. Basically, it's this much, this many cents less than the
That's
best
important.
I can get.
Freight is important.
Right. Listen, what's the best I can get, buyer-wise, and then back off freight. And handling margin. And maybe that's not enough, right? Is that what you're saying?
So I have multiple examples of this, and White Commercial, and am I allowed to plug White Commercial? I think I am. Right? I work here for 18 years. I'm going to plug it.
Paycheck.
Right? Yeah. So anyway, we have a grain flow plan and a cash flow plan, and I've created a projected income, pro forma income statement and balance sheet off of that. And we even go into the borrowing base. Mm-hmm. And I do it by month on purpose because every month has a different opportunity. So if you tell me you're going to sell harvest bushels, you're just going to bring them in and sell them at harvest. And look, if you're going to do that, make good sales early and then deliver at harvest, right? If you're doing that, how much are you going to make? It's important. The details matter here. So how much are you going to make there? Well, how much are you going to make on the stuff that you hold, and they're the last bushels you sell. So every month you have a different profit opportunity. So we're going to put that in there. And then, of course, direct ship. Everybody loves direct ship. Believe me, it helps. But think about if you're in those different markets. Some markets don't have that opportunity. So where you may be squeezed a little bit on your bushels that you're selling at harvest, or you may be squeezed because you're in one of the I states or around there, somewhere near the Corn Belt, you might be squeezed a little bit. But so maybe your merchandising margin isn't as much as you might get in the and we love the markets away from the Corn Belt too. You're not going to get as much there. Well, you get to handle more bushels. So those direct ship bushels are going to come in, and that's going to bring you up to that 70 cents, right? If you're looking at the median. I know we're all going to beat the median, believe me. But that's what I look at.
That's always a thing too on the direct ship is it's easy for folks to focus in on the bushel that they're handling off farm. And in this case, direct ships, I'm only making 2 cents on it. Well, okay, I get that. But what are you doing by moving that bushel to the cell? Well, it means you've got another bushel in your bin that you're carrying forward, picking up more carry, appreciating value.
Right.
So you got to account for that one as well. I think too many people, when they initially see or hear about direct ship, they're just thinking of there's not enough money to handle that thing. Well, there's 2 bushels to consider here. What's this other one worth?
At least 2.
Yeah, exactly. Yeah. I think if Don Rogers said the saddest day at the elevator is when the last bushel of corn leaves the bin because you can't trade it anymore, right?
Right.
Another thing you do with our customers, and so you have a lot of good knowledge on, I wanted to get, is you deal a lot with guys looking at expansion projects, whether building or whether buying new facilities, and valuations that go into that and all that stuff. So where do things sit now? Has it been a huge shift lately, or what's going on there?
So yes, to all of that, there's always a huge shift, I think, as, this market, you go into agriculture. I left banking to come into agriculture. I'm like, oh, man, you think it's a little quieter? Are you kidding me? I mean, think about
with the way the market is these days.
I was hoping you'd say that. Anyway, yeah, everything changes very quickly, and interest rates have a big deal, right? They're a big deal to any expansion project. Really, really hard to make an expansion project work with the higher interest rates and honestly the higher expenses. When you look at the steel and concrete prices and everything else, it's hard to make
it goes back to dollars per bushels of space, right?
Yes,
or
sir,
cents per bushel, like
it
you were
always
saying.
comes back to that. Yeah. And one of the things I calculate is actually the interest and the payments that you have to the bank and how much is that per dollar, right? Or per bushel of space.
Mm-hmm.
But anyway, I'll stay off of that. But it's important that we keep up with our capital expenditure needs. Very important because your businesses, these are family businesses. They're cooperatives that have been in business for over 100 years, supporting your community. You got to keep up with that, and we're seeing that start to happen. I talked to Joe Alsop. He's a CPA that's going to help us out at the summer conference. I talked to him, and he said, "Look, CapEx projects are going. We have to catch up because we didn't catch. We were slow for a couple of years. I would say in the teens, like 2017, 18, 19, I would get a project come across my desk probably once a week, maybe twice a week. And then you go later, maybe 3 times a month, twice a month.
Interest rates kind of shot
month.
up in that time frame.
Yeah, it just kept dropping on me. And, of course, it's cost and everything that goes into that. But it's coming back. I'm seeing stuff that pencils out. And not only does it pencil out, like that's my job, right, is to say, does this work for your organization, this specific project? But you also got to look at it, and this is where most of our customers go, is they look at their business as a whole. They say, maybe it pencils out, maybe it doesn't. And this is the business person to me talking, not the accountant or the banker. But they have big balance sheets enough to handle it. And they're like, we got to keep up with our customers. We can't lose customers. We don't, we want to serve them properly. So I'm definitely seeing it come back.
Yeah, despite tight tassel wrap, corn yields are going up over time, right? I mean, the bigger crops, right? I mean, this is what we're doing.
Yeah. Yeah. So, I mean, what's the general, like, what do you peg the number at?
Oh, okay. So I missed your valuation story, like what the valuation is. Okay. So I get this question all the time. I actually went back to school to answer this question in my 50s because I'm like, I don't know that I have a great answer for this. So I went back to school. And obviously through industry knowledge. And I'll say, if you're selling grain space and not the balance sheet of the business, huge caveat, right? Because if you're selling your whole business, you're making a stock sale, the number could be anywhere here, right? Because you're selling a balance sheet.
Mm-hmm.
But I'm saying if you're just selling the grain bins, those assets, honestly, you're looking depending on your market now, big difference between Illinois and Idaho, let me tell you. They're both I states, big difference. But, I'm saying anywhere between $1.50 to $3 a bushel of space is usually what I'm seeing. And what it is, okay, Idaho, incredible margins on every bushel of space.
Yes.
They are doing, those guys are great traders out there. We have traders everywhere. But it's a different market. The farther you get from the I states, other than Idaho, things look pretty good. So
Idaho's not an I state. Is that what you're saying?
It's I shouldn't say I state. I should say Corn Belt. Yeah, I do too. Yeah.
I always say I state too, but you never think about Idaho.
Yeah, I know. But
no
those
one
guys
ever
are awesome.
remembers
Shout out to you
Idaho.
guys. Yeah.
But,
It's like
potatoes.
I like potatoes.
We need potatoes. We need more potatoes. We don't have enough. French fries. So anyway, I'll say that as the general number. And then it goes back, do you have rail? What's your profit margin like? Do you have to sell? Look, you have a much better opportunity selling when you're 60 than 70. It's just reality, right? They're going to wait you out if you don't have a heir apparent or somebody coming in.
Oh, yeah. Yeah.
So what do you think is when you're helping somebody say, hey, should I buy this facility or build this facility? You look at like a amount of payback time, you think?
Yes.
Is that what you look at?
Yes.
Like what sort of payback are you looking for that's good versus bad?
Yeah, you'll see, typically heck, if you can get in the sevens on a new facility, like 7
years?
times. 7 years, yes.
Okay.
Sorry. I don't know.
okay.
Yeah, it could be 7 months. I should say 7 days. What are we talking about?
Depends where you're at.
I like 7. That's a good number.
Yes, if you're in 7 years, you're in great shape, right?
Okay.
Because the bank's going to finance it as long as you have assets behind you. They're gonna take care of you.
Okay.
Yeah. Yeah, it's awesome. Great question.
Good to know. Thank you. I work really hard on these.
I have a book too. Try to keep it
Okay.
open.
So, what sort of financial headwinds or considerations should someone be thinking about if they're maybe starting a new business? Maybe they're a large farm that has a lot of space that, maybe they want to expand into the grain world because they're kind of locked on how many acres they have, but they want, maybe more mouths to feed and want to grow their business into the grain world. What sort of financial things should they consider? Or I guess anybody that just says, hey, there's this elevator for sale down the road, and I've always wanted to own my own business, whatever it may be. What sort of...
Easy money.
Yeah, I'm telling you,
Look at those guys.
It's the
Get
dream.
the elevators cut.
Look at the new truck he's driving. It's great.
Hey, look, if they make half as much money as we make with this podcast, let me tell you, they're going to be...
Math.
owing the bank a lot of money. But anyways, what's your thought? Like, do you have some general rules or thoughts for somebody in those situations?
Absolutely, yeah. So you're starting out, and believe me, many of our customers, you guys talk to them every day, many of our customers are just starting out in the grain business. They're farmers first. They build the space. They have children. Guess what? The kids end up in the business, and this is part of that growth strategy. Mm-hmm. So it's fantastic. I love this business. So the first thing the bank's going to ask you, the very first thing is, how much money do you need? And you're going to say, well, the facility costs $2 million or whatever, $500,000, $1 million, it doesn't matter. And then you're like, okay, so banker's going to get working on that, right? And next thing you know, you realize you got to fill the space in order to make the money.
That's an empty bin.
Yeah,
that's
the
what
empty
an empty
bin's
bin
not
costs.
worth a lot, right? Selling air is it's been done
before.
before.
Fuel. It doesn't have a lot of value, I hear.
So you figure out how much you got to do, and that's what we do, right? We specialize in helping people answer that second question, right? How are you actually going to make money, and how much can you make here? So every market's different, but Usually what they're going to do is you're going to go in and say, hey, if I have X number of bushels of corn, how much are you going to let me borrow, right? And they're going to respond to, well, you get this because you're a first-year new start business. What kind of land you got? What other collateral you got, besides this corn? Because we don't know you guys very well yet at this. We don't know you very well doing this.
It's a relationship business, right?
It is. Yeah. That's business, right? You talk about that all the time.
Yeah.
Yeah.
I mean, essentially, if someone asks me how they need to make money in grain business, it's simple. It's probe before the scale. That's how I've learned on social media that all the elevators make their money is by probing the trucks before they get on the scale. One Sonic Route 44 cups worth of corn at a time.
Has anybody ever put that to dollars and cents? How much that would make?
Of course not. We're talking about Twitter.
Just it feels like somebody's stealing something, and if you do it a lot, we could be in a bad spot.
I mean, how big a cup are we talking about?
Sonic Route 44.
Yay.
Yeah.
Fractions of bushels. It's like the new micro contracts. Maybe that's what those are for, to hedge your stolen probe grain.
Yeah, the little buggy that you got all your stuff in.
Wheelbarrow,
the sample,
if you will.
Yeah, sample cart. Jeez.
That's how the people make their money. That's it. That's the secret sauce.
That's good, we've had many customers over the years, I should say, that, you get to the end of the year and you're like, I think somebody probably hauled off a bunch of grain and I didn't realize it. That happens. And, that's impactful.
Are you talking about shrink?
It's a lot more. It's a lot more than what we probe out. That's all I got to say.
Yeah, put video cameras up, guys.
There you go.
That's right. Yeah, you deal with also so Jeff hasn't. You've mentioned it kind of in a roundabout, but he's also a CPA.
Yes.
And helps guys with the accounting month ends, and that's a lot of why you see all this stuff in the financials even before the year ends. You're like,
That's
okay,
right.
I can see how stuff's building for this year. So Jeff's always got a good insight of what's going on. That's why I ask him these questions. But anyways, yeah, on the accounting side, happenstance. You end up seeing some fraud issues that you discover at times,
Right.
or help guys discover. And it's real. It's something we have to deal with, and you just got to put it in your basis, right, Roger?
No.
It all comes out in the
You gotta
wash.
protect
No,
yourself.
it's got to
Please
be in your
protect
vomitoxin discount. That's,
Okay.
second blender doesn't stand a chance.
But okay, so back to the banks, because I know that's why you brought me on for the banker's cut here. They, you want to make sure that the banker understands your business. Rule number one: do they understand what they're lending on? And I've had cases where the lenders need to learn, and we have a class for that. And I talk to them all the time. The lenders. I talk to more lenders than customers, right?
Mm-hmm.
But we also go out and actually go to the lenders and talk to them. And we have lenders come to all of our meetings. And I had a customer recently, or a new customer, hopefully, that said, "Hey, I don't think my banker, I'm getting into the business. I don't think they understand." And we have this, hours-long conversation. And then it finds out that the guy had been to our master management conference back in January, and he's a great banker. Shout out to Hart. Hart, you're awesome. But it's a small world.
Yeah.
And we get to meet everybody, and I think that's one of the blessings of our job.
Yeah, it's a pretty small community overall, right? It's of especially when you start talking about lenders for grain elevators in the U.S. Or Canada. It's a small pool.
Now, and you operated, obviously, before you came to White Commercial, you operated in the general bank sphere, finance sphere.
Yes, I did.
So you probably saw a lot of stuff in South Florida, right?
Oh,
Is there a big difference in the ag space versus the commercial space, or what?
Are you saying, is there a big difference between Des Moines and Miami?
All the guys on cocaine and getting their wives plastic surgery or whatever they're trying to do down there.
Now, what about Miami?
I never did business with any cocaine cowboys. Just
all right.
Didn't happen. And the Russians on the West Coast, I don't even know them, so remember that. Don't know them at all. But I had some fun times doing that. Great people, but when I came to ag, it was like it was a total I wasn't going anywhere.
Yeah.
I got to tell you, the customers.
That's good for me to hear.
Yeah.
We need you around here, Jeff.
We had meetings, and to see people participate like they do at our meetings, and it was like going to church. I mean, the first meeting I came to was in '08, and there were 4 guys on stage with 200 people around talking about the mistakes they made. Yeah, if I got 4 of my customers together, it was to have beers, and they were in separate parts of the bar.
Right.
Not like that.
It's like one of those old sitcoms when you have multiple dates on the same night.
Speed dating.
I'll be right back.
I put my hat on.
I'll be back for the check. Oh my gosh. Yeah, but it was fun. I enjoyed banking.
Yeah.
I like being on this side too. So.
That's good. Well, we're lucky to have you. I know you've helped a lot of people, and been a great point of difference for our business. I mean, well, Roger and I can speak to that for sure. Anyways, do you have any crazy stories you'd like to share with us from the South Florida commercial banking side of the world, or?
Yeah.
Oh, you do?
I
Okay.
got one. Okay. Yeah, I thought you had me.
Perfect.
Okay, so I was in Miami. It's funny you say that. I lived there for 10 years. We loved the Florida Keys, just so you know. Fantastic. Coconut Grove. Got to go.
Okay.
But I think I was 23. I was probably 23, maybe 22. No, it would have been 23 at this point. And
you're 23 years old.
23 years old.
Not the year 2023.
Yeah, sorry, guys. I'm ancient. So a guy, the regulators come in. You have regulators come in.
Yeah.
I've seen them. And the
Nate G.
grain companies have regulators come in. Yay. We love those people.
Got to be audited. Got to make sure everything's on the up and up. Got to take care of the farmer.
So guy walks in. It's my first audit. Yes. My first. You guys, I mean, anyway, you've been through it. My first audit. And he's doing his audit, and it's about lunchtime now. And I'm like, God, I'm sweating bullets all day. I mean, I'm wet. I mean, I'm drenched. It's Miami, and I'm inside. I'm wet,
It's a wet heat down there.
It's a wet heat. Yeah, sorry, man. I should anyway.
Wasn't that
Scratch
a movie? Google that, please.
You say hotels, you get it.
AI.
Oh, stop. Humidity. Yeah. Okay, anyway. So I'm sweating bullets. And as the guy's walking out for lunch, he says, there better be a VRG behind this loan. I'm like, VRG? I don't know what it is. I'm a year out of college.
Right.
What about the VRG? What's
Which
a VRG?
number do I divide by?
Where's my
which
forms?
Okay, I know. There's no Google back then, gentlemen. So, yeah, it wasn't easy. Anyways, I'm calling the office. He goes to lunch, and back then there was a Bennigan's across the street from the falls. He goes to lunch and comes
Great
back.
Monte Cristo there.
Oh, yeah.
All right. Look at
They had a nice happy hour, too.
All right.
And they, anyway, so he comes back, and I've called everybody I know, and it's like, VRG, we know what we're talking about. He goes, well, I finally asked him, he goes, what's a VRG? He goes, very rich guy. I'm like, oh, God. I hope he is now. No. Anyway, but that was my sweat
He's
of
good for
bullets. Yeah, he's good for it. He's got some behind him.
The acronyms, they get you every time.
Yeah.
I know. So I remember back in college, you do the intern thing, and I wasn't an intern at a bank, but I went to a bank for a day or something and shadowed a guy.
Make a deposit? Oh.
Yeah, it was. Anyways, I think it was like an ag bank. It was a rural bank, and they were talking about the 5 C's.
Oh, yeah.
Of thing.
Huge.
Of whatever. Of loans, giving loans to people.
I don't know.
5
Wait,
C's. And
who's
basically-
giving loans?
Yes.
Yeah.
Well, they were the bank.
What's the C?
And so,
He's got
well, the guy joked there. What I remember is, I don't remember the 5 C's.
Oh, okay.
What I remember is the guy coming in and saying, "What, you mean it collateral, 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 collateral?" That's the only thing that matters. So that's what when you say your VRG, it's like, all right, well, what's behind it? And we see that a lot in ag, right?
Oh, yeah.
So,
Absolutely.
new guys, farms that want to be elevators, stuff like that. They're like, well, how much land do you got? All right, well, how much money do you need? How much land do you got? Yeah, this works.
Yeah.
They don't even need to know about your grain plan and all this stuff. Now, obviously, you don't want that to be long-term, have their tentacles into your acres, right? So, I mean, you see that.
Yeah, absolutely. Yeah. So negotiate that up front. That is a good call, because you and I have done that a lot together. You have to negotiate that up front. So if they're going to put up your name for collateral, you expect it, right? Please, ladies, gentlemen, expect that. But in the negotiations, you have to say, what does my balance sheet have to look like? What does my income statement have to look like to put this back where it belongs?
Right.
Right.
Yeah.
It was free and clear before. Let it be free and clear.
Yeah.
It's like PMI on your mortgage. You don't want to keep that stuff on there forever.
Exactly.
Yeah, exactly.
No one's going to tell you when it's time to take it off. You got to be diligent.
Yep.
Yeah.
Have a plan. Stick to it. You'll make it.
That's right. Yeah. Nobody wants their tentacles in acres if you can help it. So
I don't want anybody's tentacles in anything.
Yeah. So, anyways, okay, that's good. So, another thing on my list here to ask you about, and that's how you know it's official because I made my list.
You have a list.
And I'm gonna
See
ask
the
you
list.
about
I
it.
can't read it. It's upside down,
very
but I
similar.
believe it's there.
Thing. You have a
Occasionally
different list.
left-handedly put marks on it, and I'm not even left-handed, so no big deal. I'm just trying to show you guys all the talent I have. And so, anyways,
So much.
I like
It's overflowing.
Yes.
you know,
Old lefty.
try to impress everyone out here. Another thing you help folks with, and I know we've done it together, but you know you're the Swami at this stuff.
No.
Is
gracious.
risk management policies. You get into the weeds with that stuff. So what sort of things that people? Because not everybody really has one. Everybody thinks like, yeah, like this is how we do stuff around here, you know.
Right.
But putting it into words and on a document is a good thing.
Yeah. So we worked on this. The three of us actually worked on this together, and it's if you have an established business or you're just getting started, the bank's going to want to know what you're going to do. Look, it's risk management is what you're in, right? You're buying grain, selling futures, selling grain, buying futures, setting spreads. My goodness, you got to take care of everything.
Mm-hmm.
So they want to see how you're going to do it. So don't make it long. Don't make it complicated. You're looking at 2 pages. Tell them exactly what you're going to do to protect yourself. If you're in the feed business or anywhere where you might have a receivable that you have to collect, tell them how you're going to do it and what the limits are on that as well. But on the grain side, you're hedged, right? I mean, those are the only people you deal with. You got to be hedgers, and there's probably different levels of approval, you know, before you get to a certain bushel amount. The bank's in with you. And we saw this, you know, when war broke out relatively recently. Market spiked. Banks married to you. And when they're married to you, they want to know what's going on. But you've already told them, I am going to own this many bushels, and you're going to finance this many bushels. It's in that document. So all you have to do is go back to them and say, hey, look, you guys jumped on this train.
Right.
And the train's going to end when we sell out all bushels. You know you're going to get your money back. Here's what's going to happen.
If you would like not to get your money back, then you'd pull the plug now.
Yeah. Go ahead and tell me not to be hedged anymore
Right,
and stop the margin
Here's the key
money.
to the door.
Yeah.
of
And
the
we saw
elevator.
that back in 2008, didn't we?
Yeah.
We didn't actually have a customer, but we saw them want to.
Yeah, absolutely.
Yeah.
Hey, when you're married, there's a lot of expectations. I'm just saying.
Sometimes it's best you turn the light out. We'll be mourning again one day.
For sure. So, yeah, no, that's
It's
good. The risk management policies and getting it on paper,
Yeah.
so that everybody understands. Like, hey, at this level of risk, like bushels, quantities, we need to have certain other people involved. And that the other thing is, a lot of people say like when you're thinking from the grain elevator space, say obviously I want to get rid of price risk, and here's my risk. Here's how I get rid of price risk. But there's other risks that are on that. Like, how big of a basis position do we want to build at times? Because even though we don't always think of it that way because we're basis traders, like, what's our limit here? And how much of a pre-spread do we want to put on? Like, all that sort of stuff is worth thinking through.
Yeah.
And if you think through it before you get into the situation,
You have to know what it's going to be
then
like.
you got
if you get there.
then you got guardrails to kind of keep you on the straight, because you say like, ooh, this is a really good opportunity, I want to do this, and it's like, okay, I can do this much because this is what my policy says.
That's right.
And it helps you. It helps you when you're in the thing where you think this is a huge opportunity. It's like, all right, but we can do it up to this point. And I think that's really good. And what I think Hansen says, we got to put Scott Hansen, who works with us, you got to put your guardrails up, but they have to be on the right side of the ditch, you know?
Oh, that's good.
So put them in
There you go,
place
Scott.
and keep us there. So it's a really good practice to go through, even if you think. And I have a fellow friend of ours in Ohio, Benjamin Nething, and he thinks that, you know, he can sometimes just not hedge, and as long as he posts it on Twitter and tags me, that it's okay. And maybe that's what his risk policy says, and if so, I'm here for it. I think that's great. So,
but having it spelled out, knowing what it is, knowing who's responsible for doing it, and it's all kinds of things. Not just your hedging, and what you mean by that is how much can you buy before you have to hedge or sell, or whatever it is. You keep your position limit, but also. Not that it was a problem this year, but some years in past where farmers want to sell, I might make a big crop. Maybe I need to sell 110% of my production. That falls in that as well. Yep. All of these things. One of the things we see that gets overlooked or falls through the cracks so often is undelivered contracts. Oh. And I'm not talking about whole contracts. I'm talking about a few loads left, we let it go, we don't think about it, it gets rolled, and then you wake up and it's 6 months down the road and it's like, whoa, what do we do with this? Do we buy it out? Do we roll it to the next crop? What do we do? So all these little things that feed into the bigger picture of risk management, and it's a process thing, right? It's having solid processes and expectations and communicating those expectations, and it's that simple.
So if I say I'm the grain merchant and I say I want to be long 1 million bushels of new crop, but now I got 1.5 million. Well, if you cross over 1 million and you're the merchant, you need to talk to whoever's on the manager, and you need to talk. If it goes past that, you need to talk to the ownership, because if they don't agree with that, you have a conversation, you make some sales, and you get down to 1 million. But that works for every single one of those topics. Yeah. It's all about everybody agrees to this.
Surprises in that realm aren't good usually, so you don't want to have any of those if you can help it.
Right.
Yeah, it's a great protector for your business.
And honestly. It's not hard to do. It's not rocket surgery, right? I mean,
exactly.
We have, multiple different types of plans, risk management plans, but the most common is a 2-page plan. It's a Word doc on our website. All you got to do is download it and wordsmith it. Yours is going to be yours, but it helps you to create that document that fits your culture and fits your time.
Yep.
So
Yeah. So, this is stuff, if you're a grain business or thinking about being in a grain business, you got to do all the, not just the risk management stuff, which is hugely important and simple. All the stuff is pretty simple, but you got to do it. And so the financing side, which you've helped us with a lot today, the accounting side, which we didn't get into super crazy, but it's a super unique thing for the grain business. Yes. Yeah.
Well, someone's head will explode if they listen to this.
It's practically wearing a cape. And anyways, it's very important for this industry. It's different from other industries for sure. And so you got to be on those three things. And this is the thing, Jeff, is a huge point of difference for us. And heads up all that stuff. We help him. We help along the way. But he's our point man for this. So we appreciate having somebody of Jeff's imported to the studio. So
no tariffs.
It's been a pleasure. So anyways, that's what we got today.
Thank you, Jason.
Thank you for coming along. Thank you.
Yeah.
So flattered to come all the way out here. This is incredible.
You guys are awesome.
Yeah. So we will see you guys next time, and hopefully we get another guest, so it's not just Roger and I, but you never know. You never know. But harvest is coming up, and we hope y'all have a safe one. As always, thanks for downloading and listening. And if you haven't already, please subscribe to the podcast and share it with folks you know in the business.
And if you'd like to reach out anytime about anything at all or have any show ideas, you can always find us on Twitter at ElevatorsCut. Follow us there, tweet at us, DM us, and we'll always respond.
Till next time, for Roger, I'm Jason.
And for Jason, I'm Roger.
Thanks for listening to the Elevators Cut.
Oh.